What happens when corruption infiltrates investment funds? I'm Stéphanie Lhomme, partner at Arendt, leading the Forensic Investigations, Corporate Intelligence and Litigation Support practice. And in this first episode on corruption, let's briefly explore how corruption can severely impact investment funds, whether focused on equities, bonds, or alternative assets, and therefore impact financial centers such as Luxembourg. Financial hubs are known for their stable regulatory framework and access to global capital. They are central to the world's capital flows. But even here, corruption, whether it's in the form of bribery, nepotism, or collusion, can severely undermine trust, stability, long-term growth, and in short, the integrity and performance of the financial sector. Corruption, in whichever form it takes, can and will distort markets. For instance, if a fund manager is paying bribes to secure deals or bypass regulations, if decision makers within the fund management industry accept bribes to prioritize certain investment or steer business towards specific individuals or companies, investors may find themselves exposed to excessive risk. What should be a transparent and efficient market becomes clouded with deceit and inefficiency, and the results are disastrous. Over time, this undermines the quality of investments, resulting in suboptimal returns for investors. Instead of capital being allocated based on merit and potential, it's diverted based on personal interest. Private equity, which typically focus on investing in and managing businesses to drive growth or turnarounds, can be especially vulnerable. If private equity firms are involved in corrupt practices, for example, if an investor agrees to a deal due to personal or financial incentive, rather than the underlying business' true potential, it leads to poor strategic decisions, such as overpaying for a business, or implementing ineffective operational changes. And ultimately, it leads to lower returns and severe legal liabilities, potentially in several jurisdictions. Luxembourg is a key player in the global financial system. It's a major hub for investment funds and fund administration, with an attractive regulatory environment. But it is not immune to corruption risk. In such environments, corruption may not always be as overt as bribery. It can often take the form of complacency or conflict of interest. For example, if key decisions around fund regulations or licensing are influenced by corrupt practices, such as favoring certain players in exchange for personal gain, the integrity of the entire financial ecosystem suffers. This creates an uneven playing field where only those willing to participate in corrupt activities can access critical resources, hindering fair competition. Strong anti-corruption regulations, and most importantly, relentless enforcement of those, are necessary. Otherwise, investment funds and private equity operations risk being plagued by inefficiencies, scandals, and ultimately losses. We will see in the next video on corruption that the fight against corruption will be one of the major future regulatory projects in Europe and for the Luxembourg Financial Center. Stay tuned.